Good morning. I'm Jeff Nalley. This is the morning edition of the Cromwell Ag Radio Network. Had the opportunity to be in Mahomet, Illinois, with our friends at Farm Credit Illinois, and our CEO, Aaron Johnson, with us. Aaron, you've had a few days here to be in the CEO position, and certainly Farm Credit Illinois has had a lot to endure in-house, with the loss of a key team member, to a challenge from this industry and what it's faced in the cyclical term, and then this COVID crisis. 2020 has been a dandy.
It has. We hope we don't have to go through this again, but with all the challenges of 2020, there's been some good things that have happened too, especially in the ag economy.
We had an opportunity to gather a number of your team members together and basically look at wrapping up this year and then looking ahead to the coming year. And this morning, obviously, we're talking so that your membership is involved, and then the general public who obviously is concerned and interested about the industry of agriculture. If we had had an outlook, and in fact, you and I did talk in March of this year at Commodity Classic, the situation in agriculture didn't look nearly the way in March that it does now. What a turn.
Yeah, it's been amazing really to see what's happened this year and the outlook. And now our members all have a chance to have a great year really financially and build some working capital and equity for the opportunities or the changes that might be coming in the future.
So where were we in the spring? I mean, we had seen Farm Bureau said bankruptcies were up. We had seen the number of non-performing loans was made. We were really hitting on some tough times there.
Yeah, the margins in the grain industry were tighter. I think, the hogs and cattle had gone through some different periods of time, and dairy where they were really stressed. And the grain industry was starting to see some of that stress. But land values had remained fairly stable, so that helped us. And then interest rates rock bottomed again, so that brought some positivity into it. So we were starting to have a little bit of an issue on the grain side show up and with the tighter margins and some of the cash rents. And then throughout the summer, all that's changed now with everything that's happened.
Well, even through the summer, we hadn't seen the appreciation. The markets have been pretty well flatlined. We hadn't seen China come in and start fulfilling much, if any, of the Phase 1 trade deal. There had been some token things that had taken place. We had weather events, but the market didn't seem to gain much traction off of it. Really, it was about the time that we got in the combines and went to the field that we started to see the Chinese light up, the weather dry up in Brazil, and markets really began to take off for us.
Yeah, it was just real recent, and we went through an August that took the top end out of our crop here. Mm-hmm. I think in June and July there was a lot of optimism yet because it looked like we had a buster of a crop growing, and then August we just didn't get any rain, and that took the top end off of it. We still had a good crop, but then everything else turned, and so when the commodity prices went up the way they did, and everything else that happened, now it turned into a very good year for our members.
So I think about the ag industry, and we had farm policy that was based on markets. It was market performance, and it was very difficult for us in that trade war time, in the fact that those markets we depended on that helped to support prices, China, had gone away. And farmers were suffering. There were market facilitation program payments that came from Washington that helped to stem the tide and carry us over a little bit further. In response to COVID, agriculture, not just corn and soy, but all of agriculture has seen either through CFAP 1 or CFAP 2 some support. So all of a sudden, in what really looked terribly bleak in the spring, now the market is better, the yield has been pretty good, and some of those government program checks are coming in. This may be a turn for producers that nobody saw.
Yeah, it's really going to help the producers that were struggling and trying to hold on to working capital as they went into 2020 and especially into the summer. It's a brighter outlook right now than what we had last spring and summer, for sure.
What are your concerns? I mean, obviously, farm is management, so that now that there's income that wasn't there before, you've got land opportunities that may come about. You've got machinery that will either need to be repaired or replaced. What attitude or mindset do you take now as you embrace farmers and looking toward a new crop year?
Well, I think we have to understand we're not going to likely get the government support that we've had for the last couple of years. I mean, the election's over one thing, regardless of how it ends up. We're not going to have the impetus to get the same type of investment that we've got from the government. So we've got to take that into account. The commodity prices now have really made a difference, and if we can hold that, crop insurance should also help us put a floor under some of the risk for next year. So interest rates look like they're going to be low. So I think it's just building that financial position to take advantage of opportunities. We don't know what the new political climate's going to be. It could change things on the energy side. It could change some things based on what we're going to be paid or reimbursed for in the future. If some of the climate change has an impact on where we're going. Now, we're a little bit worried about ethanol and what we saw because they didn't get the support last year that we were hoping they would get to keep going. And if the pandemic continues and hits us again, it's probably going to continue to decrease some travel, although we don't expect to see what we saw last spring in that arena. So, there are always some things that we worry about on the usage side of corn and soybeans. But it looks pretty optimistic right now going into next year.
Well, agriculture is such a universe. I mean, it's not just one or the other, and it's hard to say that everything's good or everything's bad because as we have seen the uptick in corn and soybean prices and wheat, and as we have seen some things certainly improve, for the swine producer, when we talked to the Illinois pork producers, when we talked to the National Pork Producers Council, they went through a horrible time with those packing plants closed and backing up animals, euthanization, giving them away, doing anything they could. They haven't seen any help through a CFAP program or anything from D.C. The ethanol industry as yet hasn't seen any support. We've closed plants. We've scaled back production, starting to improve now. But it's not like everything is better.
No, it isn't. They went through some real pain and are still going through some real pain. And I think it'll be interesting to see politically what gets done in those arenas as we go into 2021, if there is some help that comes that way.
Is it encouraging to you to hear Washington talk about the opportunity for producers not just to be paid for what they raise, but perhaps for the way that they raise it?
I think so. I mean, we always have to be able to take advantage of the changes that are occurring. And that's why I think you take this opportunity to build your financial position. There may be investments that you're going to have to make to take advantage of whatever that direction is in the future. And I think it's just really important for us in agriculture to maintain flexibility because we know we're going to have to adapt to changing politics, nature, the world economy, everything like you were saying. Nothing is ever all good or all bad. And being able to put yourself in a position to take advantage of those opportunities is going to be critical.
Well, if we already are no-tilling. We already minimum till, so the idea that you might be able to get paid for stuff you're already doing, that's pretty cool. But at the same time, if you're ready to embrace cover crops, if you're ready to embrace some other cropping practices that just haven't been proven to you yet that it's going to be immediately profitable on your farm, if you can find some way to get some compensation for that, it may lead us to better days.
Yeah, it could. And we'll just have to see what those parameters are and what the regulations are when they come out and how we can best adapt. It's likely to be energy focused, much more electric in nature possibly than fossil fuels. And, it's going to be interesting to see where it goes.
Aaron, I think we learned in 2020 a virtual world. I mean, we've got more people shopping online for the grocery store and picking it up on the curb than we ever have before. And here we are in a situation again where not just your offices, but government offices that farmers need to get to sign up and to do things are closed again. We've had to learn a new way to dance in 2020, haven't we?
We really have. And within the whole farm credit system, we're talking about the digital transformation that's occurring today. And that doesn't mean people don't want a relationship or an office to go to. But much more is going to be done over the computer and on the web and digitally and even signatures. And so we're all working together to see where that's going to take us. But I think over the next, 10 years for certain, it's going to change the way a lot of people do business. And
do you have customers that have been challenged because they don't have good broadband at home?
without a doubt. And when, we've got most of Southern Illinois also. When you get in parts of Western Illinois and Southern Illinois, there's just not good broadband available. And so we continue to look for opportunities to participate in that arena because we have to have reliable, fast internet service if we're going to participate in this transformation that's coming.
It was talked about in this Congress now and with this administration, and there's been a lot of work done on rural broadband, but I know it's one of the things that President-elect Biden has talked about and members of Congress on both sides of the aisle, that rural infrastructure and specifically rural broadband has got to be addressed, whether it's for agriculture, healthcare, education. It's almost become the utility that we can't do without, not a luxury anymore.
It has, and it's even difficult for the service providers. We've locked the offices, we're taking appointments, we're meeting with our members as they need that one-on-one attention, but we're telling our employees to work from home as much as possible. Well, a lot of them can't work from home because they don't have fast enough internet service to get on a Zoom call or to do the things that they need to do to serve the member. So it's a challenge for us, even as a service provider, let alone being a farmer or an agricultural producer out there today trying to keep in touch with what's going on.
When we saw agriculture in the downturn following 2012 and even up until the spring and summer, were you surprised that land values held as firm as they did, providing the equity that kept producers afloat?
I guess so. I mean, when I think back about it, we talked about thinking this was going to be a soft landing. We really didn't see a major drop coming because of what was going on in the world economy. And so we got up and dropped 15-16% from the top end, and we felt pretty comfortable in that. I thought it might go down another couple $1,000s an acre on the A ground, but it held. Our benchmark farm study that we do every year this July showed it flat. Some up a little bit, some down, but so we were even stable the last 12 months, even with declining margins. So, there's some pressure on the land market now on the upside with what's going on in the marketplace, and so we could see a little increase in land values, I think, here over the coming months.
Where would agriculture have been without those MFP payments and without the CFEP payments that came earlier this year?
Yeah, we'd still be looking at much tighter margins, a flat to slightly decreasing land market right now, I think. Mm-hmm. The land market's going to go based on margin. And with everything that happened in 2020, that's just increased the margins enough that we'll probably see an uptick in land values.
I know Farm Credit Illinois is very aggressive in reaching out to the next generation of farmers. You do a lot of work to educate them, to help them along. Now that we've seen this downturn and then this upswing again, what effect has that had on the young families, the young individuals that are trying to get into this business?
Yeah, it's really tough on the young farmer today because of the cost and the capital requirements to get involved. So we saw a lot of young people coming back to the farm when times were really good there for a while. And then margins tightened, and it made it much more difficult to bring the families back in without some off-farm income. A lot of them got stabilized in those operations, so now they're going to be challenged if land values do go up and cash rents do go up from where they've been in the past, because if you don't have the working capital and equity, it's really tough to compete for the higher end land prices and cash rents. So
darned if you do and darned if you don't.
Yeah, it's a good problem to have though, right? I'd much rather be on that side of it. Our program's called Fresh Roots, and it's really set up to help the younger generation get started and get involved in agriculture.
Since in the downturn we were using so much of equity, and I know you were refinancing and you were doing everything you could to keep producers viable and keep their operations and their families alive. What is a breath of air like now with the support from Washington and certainly the more improved commodity prices? What does it enable you as a lender to do for your customer?
Well, it's really a blessing because it allows us to spend some of our capacity and capital investing in areas that bring them more value in the future that we weren't really doing before. Farm Credit's a cooperative, so it also enhances patronage that we can return to our member borrowers. And our delinquency rate is almost at an all-time historic low, which means our members are coming through 2020. They're able to make all the payments. and I think build some working capital and equity that's really going to assist them next year. So, with all the issues in 2020 politically and with the pandemic in the agricultural sector here in central and southern Illinois, it's been a very good year.
Feels good to get the bills paid. I'll let you know when I get there. And I know that you work with the individual producer, but let's talk about the landscape, because we had the farm equipment dealers that were caught in this downturn. We had the ag retailers that were carrying a certain amount of debt they were challenged when we couldn't plant years ago, or when crops went the other way. They suffered as well. What's the landscape like across the agriculture service base for producers?
Well, I think this year has done for that base what it's done for our individual producers at the same time. It's taken some of the pressure off of what we were feeling with those margins, and with our delinquency rate being so low, I'm sure their delinquency rates are low also, as either an input provider or in any of the other areas of agriculture. So I think it should have healed the industry up and put us in a good shape to deal with what's coming at us next.
You think there'll be some new paint making on the farm in 21?
There has been a lot of new paint this year. Our machinery business is setting an all-time record here. So times are better on the farm when you see those kind of numbers come in on the machinery side.
Sometimes you can't afford not to.
Yeah.
Machinery cost is a part of the operation, and certainly the technology that's involved there. It just leads to efficiency, to sustainability, and also the more time you spend with wheels or tracks running is better than time at the shop trying to get back to the field.
It is, and with the last couple of years, that's what we cut back on. When margins are tight, you cut back on the machinery purchases. So it's been good to see those come back.
So we're coming up on Thanksgiving. I ask you the question personally, Aaron. What are the things you're thankful for here as we approach Thanksgiving in 2020?
Well, here at Farm Credit Illinois, I'm just thankful to work with this group of 248 employees who are very committed to helping farm families succeed. And, it's been a trying year, but at the same time, a very successful year for us and our members. And I couldn't be more thankful to get up every day and work in agriculture.
Wonderful. Aaron Johnson with us this morning. He is the CEO of Farm Credit Illinois. I'm Jeff Nalley. This is the Morning Edition on the Cromwell Ag Radio Network.